What's up, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So there's investor loans, okay? These are loans for people who want to get into the rental business. This loan product is actually called a DSCR loan, which actually just stands for Debt Service Covered Ratio, which just means that is the debt covering the service of the ratio. Now, the ratio is what we calculate. The debt is going to be the amount that you're borrowing, and the service is going to be the total amount of rent that you're going to be receiving. And that is called a debt service covered ratio loan. That is for people who are trying to become investors. Now, this is April 2022. This is the updated one. These debt service covered ratio loans, they actually go really up there. Way up there. You could go up to like 30, 40, 50 million dollars if you want. But for this one, I want to go ahead and do something to where I could get to actually towards the end of the video, if you want to stick along, I'm going to actually price one out so you actually see, as of right now, how much it actually costs to go ahead and get one of these debt service cover ratio loans. And I'm going to go ahead and go through some of the new updated parameters on loan amounts that are going to be up to $2 million. Now, what I'll do is I'll go ahead and do one at $2 million purchase price. Actually, I'll do $2 million max loan amount. And then the second one, I'll do one for $500,000. So you can kind of get an idea of what the price difference is between one versus other, how much it'll actually cost to go ahead and obtain one of these loans. So the new updated of this is of course, this could be a 30-year fixed. Interest only, though, is honestly the way that most people like to go to. Because you want to make sure that your debt service is going to be at the lowest part possible. So if you were doing an interest only loan, which majority of investors, that's what we do, myself included, we go with interest only because I want to make sure my total liability at the very initial part of it until I could go ahead and cash out, refinance, and get my initial capital back. I want to make sure my initial investment is as low as possible, just in case. And especially, like, for instance, if you ever have somebody that, they skip out on rent, and next thing you know, you have to go ahead and evict them, and, that headache. You just want to make sure that your liability costs are at lowest that you possibly can. And then as money starts coming in and you get that initial capital, then you could dump it back into the property and then, keep the cycle rolling. It's actually a strategy. It's called the BRRRR method. The BRRRR method is buy, repair, replace, rent, and then repeat. It's pretty simple. It doesn't take a genius to go ahead and figure this out, but it does take a genius to go ahead and find one that's, especially now, if you found one that's a really good deal right now in 2022, my hat's off to you. You're the business. So 30-year fixed. You could do interest only as well. Investment properties only. You cannot live in this property. If you want to go ahead and do a single, a duplex, a 3 or 4plex, those you could jump into any conventional loan, 20% down, and then you could go in that. And the reason why those are actually better for 4 units and below is because you still fall under the conventional Fannie Mae Freddie Mac guidelines, and then this way you don't have to go ahead and get hit at a higher interest rate. The interest only does come into play because the interest only, sometimes it kind of teeter-totters. Sometimes interest only is better on investor on the DSCR loan, sometimes it's not, but these are options that are available to you. Max loan amount on this initial product with this wholesaler that we sell to, and I'm just doing this for the everyday person, right, is going to be $2 million. There are going to be 2 appraisals done on this property. Typically, whenever you're doing what's called a debt service cover ratio loan, these investor loans, they always require 2 appraisals. I have no idea why. Maybe they have no trust in appraisers. Whatever. Okay, so the minimum FICO on this, I'll go ahead and run the scenario based off of a 640, a 700, and an 800 credit score, so you could kind of get the idea of exactly where we're at and where you should be at and what the price difference is, because ultimately everybody just wants to know the price difference between how much it would cost for me to get this loan versus getting another loan versus how much would it cost me just to get into one of these loan products. Max loan to value is going to be 80% loan to value. Now, you can go 70% loan to value if you have nobody in the complex or anybody in the 2, 3, 4, 5, 6 units, whatever it is. And yeah, so AUS is the next part of it. AUS is something in the mortgaging business, is something when we go ahead and we take what's called a 1003. The 1003 is just a fancy name for a mortgage application. When we get the mortgage application, we have your income, you have your liabilities, we have your assets, we have, your rental history, your housing history, your mortgaging history, everything, and we put it into that 1003. After we put in that 1003, then we go ahead and submit everything that we're doing. After we go ahead and lock in a rate, lock in a price, everything gets all dialed in, we put in down payment, all that other stuff is dialed in, then we run AUS. AUS is an automated underwriting system which connects the application to a credit application. So we have a secondary company that we use to pull credit. Now, when we run through these wholesalers, we have to go ahead and let these two talk to each other. These two will talk to each other to go ahead and confirm what we put in this, will go ahead and qualify you for this. So these two will coincide. Well, on this one, since it's a debt service cover ratio, this is one of those things where income is not important. AUS, because there's no credit needed, not important. We don't need anything. We just have to make sure that A, your down payment is there. B, we could source the funds for your down payment. And then the last one, that there's actually people living there or not living there, depending, and that'll help us calculate your total down payment. So we don't have any AUS run. So that's always a great thing. There's no underwriting. It's always going to be what's called a manual underwrite. So the underwriter is going to go ahead and make sure that everything is dialed in. First-time investors, there are first-time investor programs too. If you are one of those first-time investors in the state of California, let me know. We'll go ahead and, because there's a strategic plan that we have to have, because as a mortgage broker, as a real estate broker, and an investor myself, the worst thing is a wham, bam, thank you, man type of guy. No, what you want to do is you want to work with a broker. You want to work with a lender. You want to work with that money person that's going to go ahead and make sure that you're going to succeed in the next 10, 15, 20 years, because I don't want to just do one loan off of you. I don't want to do 2 loans off of you. I want to do every loan from you. I want to do your parents' loans. I want to do your kids' loans. I want to do your grandparents' loans. I want to do your ex-girlfriend, your single girlfriend, your ex-wife, new wife, whatever. I want to do everybody's loan. So the point is to make sure you have a relationship with a broker that will go ahead and keep you dialed in, and you guys get to work side by side together as long as you can until you have that multi-million-dollar portfolio. Rate terms. Now, rate and term, that just means that there is no money coming out. It's just going to be the rate, and then it's going to be a 30-year term or a 15-year term, 20-year term, whatever it is. That is a rate and term. Now, if you do just a rate and term, this is the addition that we have right now. You could actually get up to $5,000 back, and that is from the wholesaler direct. You do need 12 months of housing history, and then we have something that's called an HPML. An HPML is just something to make sure that if we're selling it to Freddie Mac or Fannie Mae, that we cannot charge extra fees on anything. So your total fees on any mortgaging products cannot exceed 3%. Once it exceeds 3%, then you get an HPML fail. And this way, so whenever you're like, oh my God, this person's gonna take advantage of me, and mortgage 2008 flashbacks, oh shit, everything is going array. That can't happen. We are only limited to how much we're able to charge on fees, and it could not exceed 3%, just pretty much on everything in real estate. So for the most part, that is going to be the updated requirements for the DSCR loans. So now what we're going to go ahead and do is we're going to go ahead and dive into pricing out a loan, because hell, that's probably the reason why you're actually here. And I swear, I don't think anybody does that. I honestly think this will be the only video on YouTube that actually prices out a loan. Now, I'm not going to show you my commission rate. I'm going to show you how much I make, because, well, I just don't like to do that. But let's go ahead and get on with it. All right, so what we're going to go ahead and do is, this is typically what we have as a drag and drop, okay? So whenever you go into the website, you go ahead and do what's called a 3.2 file or a 3.4 file is what we have, and we just go ahead and put it in here just to kind of get an idea of, all your basic information that we have in. So what we're going to go ahead and do is, for the sake of this, I'm just going to go ahead and put test. We're going to do, let's do a 640 credit score on this. We're going to do no monthly income. We're not going to do a primary residence. We're going to do what's called an investment property. We're going to do a 14 days for occupied. That just means that it's occupied for 15 days. We're going to go California. We're going to go ahead and, I don't know, we'll just do the last zip code that we have. That's in LA. For the sake of, we're going to do, this one is going to be at no, we're not going to do a second loan. We're going to do $2 million. $2 million. Sale price is going to be 2.4. Let's do 2.45. Because we need to make sure that that comes down here. Still not there. We're going to go 2.5 million. I should probably be better at this, but I'm stupid. So that brings us to 80% loan to value. I'm not going to go ahead and do the rest of this. I'm going to go to borrower paid because I do not want you guys to see how much I get paid. That's weird. And then we're going to go ahead and go from there. Now this wholesaler right now that we have is actually, it's a United Wholesale Mortgage, but there's a bunch of other companies that actually do this. So what we're going to do is we're going to go ahead and get a quote on this. We're not going to waive underwriting fee. We're not going to do any of that. We're not going to worry about all the rest of this stuff. So we're going to come down here and it gives us absolutely nothing. Now, what do we have going on here? Why did that change the single family? We're going to go to 2 to 4. 640 credit score. Oh, I'm stupid. So 640 credit score will not give you any product. So let's just jump to the 800 credit score. This is why it's good to have credit. So what we have here, this is going to be the rates that we have on a $2 million loan. So if you go down to the left-hand corner right over here, you will see the interest rates. The interest rates are going to be as followed. You could still get a 4.875, but I want you to come over here, pricing breakdown. The loan amount, your final price to purchase this loan, $2 million, will cost you $1.24 or $124,000. 1.24, I got these millions stuck in my head. But this will cost you $124,000. Now this is without any origination fees, any title, any of that stuff. And if you come down to the 725, that'll put you at $31,880 closing costs total, which will bring your total principal and interest. This will be your principal and interest payment right up here. We'll put your principal interest at 20% down at $13,643.53. Now let's see if we could get down to the 740 credit score on the same one to see if that changes anything, to go ahead and get a quote, gives us any other products. I think. All right, so let's see, that same 725 is actually going to cost us payment. So at 740, or at the 740 credit score, you see this is at 33,380 for a final price. That's why credit is so important. So if you come back to the 4.875, now we're at 125,500. That's why it's really important to go ahead and make sure that your credit is always good. The final price is still going to be relatively high. This is a non-qualified mortgage. Now, for the sake of argument, let's go ahead and come down over here. Let's say you're at 740 credit score. We're going to change the sale price to 750,000, which is going to be 750,000 is appraised value. Loan to value, we'll do 80. So that's going to be a total loan amount of $600,000. That'll put our LTV at 20%, so we don't have to worry about anything else. Unoccupied, you can go to 30%, but we're going to go ahead and come down here to go ahead and check to see what we got going on. So if you take the highest rate over here is going to cost you $8,514. If you want to go ahead and take the highest rate or the lowest rate, that is actually going to cost $36,150 to go ahead and buy that rate. So this kind of gives you an idea of exactly how much it costs. Your principal and interest payment will be at $3,175.25 a month. And yeah, as of April 2022, this is where we're at on these DSCR loans. Now, there are better priced ones. So, but as far as better pricing when it comes to any one of these, it's not much. It might, that's why I'm giving you this one. Now, I have a program that's called Lending Pad that we typically use. But for the sake of argument, I'm just on his website. This is how much typically it would end up costing relatively across the board. You might have 0.1% better pricing here, 0.1% increased pricing there. But for the most part, this is exactly where you're going to be at. So that's how much it costs to go ahead and get one of those loans. So if you like the content and if you want up to 50% commission rebate on purchasing your next investment property, on any property, because God knows you're going to need some money after you spend all this on rehabbing, on buying this mortgage product, and all these other good stuff. If you had any mortgaging questions, link in the description below. I'll be more than happy to go ahead and help you out. And 0% listing fee on selling your current home. Let your boy help you out. Until next video, guys, I really appreciate you guys watching. Thank you. Hit that like, subscribe, comment, all that other good stuff. Until next video, guys. Peace.